Well, hello, and welcome everyone. Welcome to module number 9. This is module number 9, multiple cycles for maximum profits. Multiple cycles for maximum profits. So, I can see that we've got people flowing in here, which is fantastic. We are recording these, all of these crypto modules, I guess you could say, in front of a live audience, which is always awesome because there's always some great questions and different things, which is always a good thing. So thank you so much. Hello in the chat there. If you are joining us live, thank you so much. If you are watching this as a recording, as always, if you have any questions during this module, please just send an email to our amazing support team, support@fastlaunchdigital.com, and they will be able to answer whatever your questions are in regards to this module. So yes, so this is a very exciting module because this is our 5th step in the crypto pentagon. Yes, and welcome to everyone who's coming in here and who's with us live. And yes, as I said, if you're watching this recording, welcome to you as well. So yes, this is our 5th step in the crypto pentagon. This is number 5, what we like to call multiple. And this is where, as I was sharing in the last module, where the expert investors sit. Okay, this is where the expert investors sit. So quite often we will get people that are after, short-term gains and things like that. And that's what we like to call, shall we say, dumb money. But what we want to be smart money. We want to be an expert investor. And this is absolutely where expert investors sit, because what you can do is you can multiply your gains to maximize your profits over multiple market cycles. Okay. So this is where it can get really interesting, and it's crazy how big the numbers can actually get when you start stringing together multiple cycles. Now, I never thought it could potentially end up in the millions of dollars where it is currently, but I mean, this is what can happen if you start to string together multiple cycles, and the numbers can continue to keep getting quite big if you are doing this in a controlled and thought-provoking way, and you're not just jumping in 2 feet first, as we say, and being reckless. So, you can build an amount that's maybe a smaller amount at the beginning of a potential cycle into what ends up being, after a couple of cycles, quite a large amount. But the issue is, as with everything, most people want it tomorrow and therefore end up losing because they just simply don't have the patience to do it over multiple cycles. So that's what we're going to really focus on over this module, is the potential of what you can do if you apply the right mindset to this. Some incredible returns can be made. This is the part of your journey, right? Now you are in your beginner journey. As I said, all of these modules are directed towards beginners. So if you are in your intermediate or advanced stages of crypto, there may be things that we cover here that potentially you might not find, or you may have heard before, you might not find as engaging. But this is directed at all you beginners. Is you need to decide if you're going to be an amateur or a professional, right? So you can see here, the difference between, an amateur photo on the left-hand side of the screen and a professional photo on the right. The professional photos doesn't have the glare in the background. It's got the Photoshop, I guess you could say, of the people and things like that. So this is the difference between an amateur and a professional. This is the difference between potentially creating generational wealth and not creating generational wealth, right? So generational wealth comes from stringing together multiple cycles like professionals do. You need to cycle, okay? Quite simply, you need to cycle. And to do that, you need to change your mindset, because most people, when they see this, they simply think, oh, okay, well, then this is how most investors think. I need to get rich in a hurry, right? I'm going to get rich in a hurry. It's going to go up. and I'm going to get rich overnight, within a very short space of time. And then unfortunately, what happens as the market cycle kicks in, it goes down. And because you, as an amateur investor or purchaser into crypto, if you've bought emotionally, you are going to sell emotionally as well. Okay, so that is the issue that we have, is that if you bought emotionally, you are going to sell emotionally. And we need to cycle through multiple cycles to be able to expedite our gains. So this is what the experienced investor does, right? They don't just say, I need to get rich in a hurry. They say, I'm in a good position to get rich based on what I learned in the previous cycle. Okay. So this is what I'm talking to here, is people that want to be an experienced investor and be able to capitalize on multiple cycles of the Bitcoin cycle. Okay. This is what I'm talking about here. Now, I totally understand, and people talk about different things, and they say, I may be old, later in life, so therefore, I don't have as many cycles as someone else, and all these other things. And I think I shared this in the previous module. Unfortunately, the market doesn't care about your feelings. So the market doesn't care that you may be older and you may potentially not have as long to invest in the market and all these other things. The market just simply doesn't care that that's the case for you. And what's going to happen, quite simply, is that you are either going to play by the market's rules and be an experienced investor, or you're not. They're the kind of two choices here. Because as I said, unfortunately, the market does not care about your feelings. I'm saying this in a very nice way. I could be saying it in a much more direct way, but I'm just being straight to the point here with you guys, right? So if you want to create generational wealth, then this is done over multiple cycles. We need to string together multiple 4-year cycles, right? So if you want to win the game, you got to play the long game. You need to do this over and over, and remember the predictions of where this is going. Okay, remember that if we use Bitcoin as an example, Bitcoin is the best performing asset in human history. It's gone from a fraction of a cent in 2009 to currently being worth tens and tens of thousands of US dollars as we speak. Okay, so therefore, it's you need to keep your focus on the long-term vision here. Okay, now I believe I'll build more wealth from this than any of my businesses, in my opinion, when it comes to Bitcoin. So if that's the case, then I've obviously got strong conviction in this. And if you want to be able to make money over a long-term period of time and wealth over a long-term period of time, then that's the kind of mindset that you need to have. And we shared this. I shared this in previous module as well. We need to be counter-cyclical to what the masses are doing. Okay, like I shared before in the previous module, we need to be buying when there's blood on the streets. We need to be buying when prices are down. When everyone else is selling, that's when we need to be buying, right? And the alternative to that is when everyone else is buying at the top, that's when we need to be taking our profits. Okay. Investing, it's not hard if you zoom out and you stockpile cash and you buy when it's at wholesale prices and you ride up, and then you take the profits and then you repeat that. The biggest issue here is going to be yourself getting in your own way. Okay. So that's the big thing here, is that and this is what 99% of investors issue is themselves getting in their own way, right? If you zoom out and you realize what Bitcoin's doing, it's going to continue to go up in an upwards trajectory against the dollar, right? It's going to do that against the dollar, against the yen, against the pound, against whatever government issued currency there is in the world. It's going to go up against that, right? Of course, it's going to have days and weeks where it's potentially down against it, and even months where it's down against it. But ultimately, what we're seeing is that we've got the greatest and hardest money that's ever been created in human history in Bitcoin. The greatest deflationary asset ever against an inflationary instrument like government issued currency. It's only going to go up in one direction against the Bitcoin, and that overall is up. So what we need to do is we need to zoom out and play the long game. The problem is the game most investors are playing is the short game, right? So they're looking at this, they're getting in low, and then they're trying to sell at the top, and then they might end up, if they time it right, they might end up getting it at a good price. But then the issue is then maybe they end up moving out of the Bitcoin or crypto market and they never come back again. There could be a variety of things that could potentially happen, where I believe that if we play this thing over multiple cycles, that's when we're going to be able to create some pretty amazing gains. So playing the long game, how many years do you have until your retirement age? You can also create yourself cash along the way. Build up what I like to call, and I call in the book, building up and setting up your golden goose. Most people want to get rich quick now, right? That's we want to be counter cyclical to what the masses are doing with this get rich quick now thing. Okay. The advantage is we can do this with our personal, our self-managed super fund as we have here in Australia, or maybe that's whatever your retirement fund is, wherever you are in the world. Most people's superannuation funds are a complete wasted opportunity. Most people's retirement funds are just completely wasted. But if we're looking at this over long term and over multiple cycles, that is how ultimate gains are made. So the game that the experienced investor is playing is this. Like I said before, they're playing the long game. All right. They're doing this over multiple cycles, over multiple halvings. And that is how the long-term investor is profiting from this and creating generational wealth from this, right? Up, down, sideways, repeat. Okay. This is something that happens and has been happening over multiple cycles. You can see here back in the 2012 to 2016 halving. This next one, the 2016 to 2020 halving, followed by the 2020 halving here, and then the most recent halving as we're coming up here. This is what we're seeing. We're seeing this general overall pattern, right? We see the halving happen. We see sideways action followed by upwards movement, down, sideways action, halving, upwards movement, down, sideways action, halving, upward movement, down, sideways action, halving, right? So this is the pattern that we're seeing. Now, just because we've seen that consistently now over the previous kind of 12 years, does that mean that it's going to continue on forever? Of course, it doesn't mean that. But what it does mean is that if we look at patterns that consistently follow, and what we have here is a Bitcoin 4-year cycle that's been consistently in place now for multiple cycles, then history quite often tells us and predicts where the future is going to go. Now, like I've said in previous modules, we always need to be adaptive and adopt to whatever the market's telling us. Now, as I said, does that mean it's going to continue on like this forever? Of course it doesn't. But all we've got right now is what we've got in the history. But what we do need to know is that yet we have some of the biggest in institutional monies in BlackRock and Fidelity. And just Fidelity as an example, they've incorporated, I think it's around 1 to 3% of their Bitcoin of their allocation into Bitcoin, right? So this includes the spot Bitcoin ETF as well. Now, this inclusion is in a conservative fund, right? So suggesting it kind of reflects a positive look on Bitcoin. Okay, so if we start getting some other funds doing even more than that, then that's when we get going to start seeing some considerable amounts of money pouring into this space. Now, do I believe that this all revolves around institutional money? Absolutely not. But what it is going to bring, it's going to bring a lot of extra funds to the market, and therefore for people who are in it before all those funds hit, like you and I, we're going to hopefully be able to really capitalize on that as well. So this is how we build real wealth over multiple 4-year cycles. Okay, we dollar cost average buy, we dollar cost average sell, we pay the tax on our gains if depending on your jurisdiction or whatever is happening in your jurisdiction. We dollar cost average buy back in at the bottom. We dollar cost average sell, pay tax on the gains, dollar cost average buy, dollar cost average sell. You see the pattern that's happening here, yeah? Now, this is how experienced investors have been doing this over multiple 4-year cycles. Now, once again, just because it's set like this in history doesn't mean it's going to stay like this forever. Of course, it doesn't mean that. But what we have right now is a history of this repeating itself over and over again. So whilst the repetition is in place, we're going to capitalize on it, right? Because as we know, history quite often repeats itself. So sell each cycle or hold long term. Now this is a question that you need to ask yourself and something to build on. Okay, so let's look at what happens to a number of different tokens. Let's look at what happens to our profits over multiple cycles as well. So if we hold or exit our positions at the top of the bull market, let's have a look here. So let's say, right, we've got the halving here. We're holding Bitcoin to the top. Right, we're holding Bitcoin the whole way down, and then we're holding Bitcoin over there. And now we've got here is where we're moving up and we sell altcoins at the top, and then we buy back into altcoins at the bottom, and then we start selling our altcoins towards the top of the market. So this is one way that we can just hold our Bitcoin through multiple cycles and never sell, or we can exit at the top and buy then again at the bottom. In my opinion, it's always a good idea to be selling at the top for altcoins and buying back in at the bottom for altcoins, because quite often what we see with altcoins especially are significant drops in price. So when we're seeing bear markets and prices are going down significantly, we're seeing significant drops where you can, in paper, you can lose a significant amount. So in my opinion, you're always best selling your altcoins near the top of the cycle and buying back in at the bottom if that's what you choose to do. So let's look at altcoins profit and the number of tokens around that, right? So if we have a look here, holding long term versus buying and selling each 4-year cycle, right? So let's have a look here at a hold for a long term, yeah? So if we buy 10,000 tokens, let's say at 10 cents each, right? So we're talking about an altcoin potentially, and we're buying 10,000 of those altcoin tokens at 10 cents each. That's $1,000, right? So we're buying that near the bottom at the foot of the mountain, as I like to say. And then it builds up over that bull market period. Let's say it does a 10x on that altcoin and it reaches $1 in price. But then what's going to happen, and quite often this happens with a lot of altcoins, they'll reduce, 80%, sometimes more. So it goes down to 20 cents. But then what we can do if we held, then a lot of the time, if this is an altcoin on a longer term scale and we go into cycle 2, we can then sell those 10,000 tokens then at $2, say at a $20,000, a 20x gain, right? So that's a 20x gain if we do it over multiple cycles. Now, what we need to be conscious of here, though, is that not all altcoins are going to rebound back up into the next cycle, okay? So we've seen this with multiple different altcoins, but it's not something that is guaranteed every single time. So like I shared before, quite often it's best to sell at the top, buy back in the bottom at 20 cents, and then sell at the top again at $2. Before it drops back off over the next cycle. But this is how you can make long-term gains on altcoins as well. And if we're buying and selling each cycle, this is how you would do it. As I explained before, we buy 10,000 tokens at 10 cents. We sell those 10,000 tokens at $1. And then we buy 50,000 tokens at 20 cents, which is the $10,000. And then we sell the 50,000 tokens at $2, which is in fact $100,000, right? So instead of 20xing our money, in this case, what we've done is we're 100xed our money, right? So if we had have held on to those coins, we would potentially only 20x maybe at a best case scenario. But now, because we bought and sold, as I say, is the best way to do in altcoins, you buy at the bottom, sell at the top, buy back in at the bottom, and then sell back at the top. We've made a 100x gain as opposed to a 20x gain over 2 cycles. So let's look at an example of multiple millions over multiple cycles. Now, a very good friend of mine and a gentleman on our team called Greg did this, right? Now, while this is a hypothetical example that I'm going to share with you, this is close to the exact math that he used. Now, let's look at tens of thousands to hundreds of thousands, right? And then hundreds of thousands to millions, and then millions to tens of millions over multiple cycles, okay? So as we can see here, cycle 1, cycle 2, and cycle 3. And this, of course, assumes diminishing returns over time, and it does not include tax, to keep it simple, right? So what do we have first? We've got, let's say, $20,000 that we put into the market. It's done a 10x on our return. It's reached a top of $200,000 after the first cycle, okay? Now, if we look down here and we go into the next cycle here, we've got $200,000, this time at 8x's, and we're now up to $1.6 million, right? And then $1.6 million down here, but this time at 7x's, we're now at $11.2 million. Now, this is quite simply from just holding on to potentially a coin that has long-term value. So a prime example of this is Bitcoin, right? This is a prime example of this. The multiplication gains are somewhat even more. But this is a prime example of how over multiple cycles, right, just through the power of patience and holding on over multiple cycles, how people that made exponential gains in 2017, right, if they didn't exit the market then, and then they stayed in there till 2021, made continued gains as it went up to 70,000 US dollars, and where we're potentially going to head now towards the end of 2025. So this is how the benefit of quite simply just holding on to your Bitcoin over multiple cycles can have a massive, massive effect over time to the overall money that you will end up with. You can start with something as low as $20,000. And as I said here, a simple 10x, 8x, and then a 7x, which if anyone has been in Bitcoin and crypto cycles knows that those kind of multiplication gains are not a difficult thing to achieve. You've all of a sudden over 3 cycles turned $20,000 into $11.2 million. And that is quite a good return in anyone's book. So what about the impact of tax? This is a question that I get asked all the time. So let's have a look if you apply tax to the same scenario. Now, obviously, tax is going to vary from country to country, and in many cases, state to state, right? In most regions, tax is payable when you sell. Now, I may not be talking directly to you. Maybe you're in a different tax jurisdiction or whatever that may be, but let's talk about it around the impact of tax, because this is a question I get asked all the time. So let's apply 20% tax to the same scenario, right? So let's apply 20% tax to the same scenario. So cycle 1, $20,000, right? And then we've got a 10x in price. We've reached $200,000. But then let's say there's a 20% tax scenario. Well, that's $40,000 worth of tax. And now you're down to $160,000. Then we 8x that return. That takes our $160,000 to $1.28 million. 20% of $1.28 million is $256,000 in tax. You got $1.024 million. After a 7x, we're still looking at a very, very nice and tidy $7.16 million over 3 cycles. Okay. Now, obviously, what we're talking about here is the implementation of tax, and I always say to people that no matter what, no matter where you are and the jurisdiction you're potentially in or whatever it may be, you're always best off getting the best advice that you can around tax and talk to a crypto accountant much more than, say, a normal tax accountant. But they're going to be able to give you the best advice to follow to follow along with. Now, Bitcoin is being included in conservative investment vehicles, and over time can make incredible returns. When you look at Bitcoin from a crypto perspective, it's classed as a very conservative investment. And as I said, Bitcoin alone can make you incredible gains over multiple cycles. It's all about patience and extending that period of time out over multiple cycles. So the question is then, do we keep or do we spend the golden goose? And what's the impact on that, right? So if we think of our portfolio and our Bitcoin as a golden goose, and let's say its gains that it makes are the eggs, does it make much difference if we spend the eggs or keep them and allow them to grow? what kind of difference does it make? Let's look at in the example of, if let's say you have a friend who isn't working, and we started with the same amount. Now, he didn't work, he didn't feed the beast, he didn't add extra money to his Bitcoin portfolio over time. Then he would have consistently been eating into his golden goose eggs, into his gains from his crypto, right? If he's not feeding the beast and adding into it. Now, my portfolio, more than doubled now, right? It would be as much as 5x by then, or even more by the end of a cycle, if you're feeding the beast and you're adding to it, and you're not taking away that constant giving that Bitcoin will give you over time, which is essentially it'll go up against the dollar over time. So if you don't take away those dollar gains that you'll make in Bitcoin, then over time you can keep that golden goose intact. And let's say that 0.1 of a Bitcoin, or one whole Bitcoin, or whatever it is that you may have, if you're not eating away at that Bitcoin over time, then it's going to consistently be giving you golden goose returns over time, rather than you chipping away at it. So this is where I talk to people about dollar cost averaging, or feeding the beast and adding money into the market. So keeping or spending the golden goose. Well, let's look at this as if we spent the golden goose. So let's say at the top of bull market one, you have $500,000 worth of investments and profits from the golden goose. Well, let's say then we spent the golden goose. Let's say we spent $200,000 of that, and we kept $300,000. Well, the investment in bear market two is then an investment of $300,000, and let's say we get a 5x gain from that. Well, then the top of bull market number two, we go from $300,000 to $1.5 million, which is still fantastic, and that's awesome, amazing. But let's look at it if we kept the golden goose and we didn't take Bitcoin off the table. Well, at the top of bull market one, we'd have our $500,000 investment. Now, instead of spending the golden goose, right, we saved the golden goose. And what we actually did, we actually earned additional dollars for living expenses, right? And what we actually did was we earned $200,000, right? That covered those expenses. So therefore, we didn't need to spend that $200,000. So we kept the $500,000. We kept that $500,000 there over that 4-year cycle. Well, then what happened is that when we invested that same $500,000 in bear market two, if we were to achieve a 5x return, we now have a total profit at the end of bull market two of $2.5 million, as opposed to $1.5 million. So quite simply, from you not taking out those gains at the end of bull market one, and holding onto the golden goose eggs that you've got of Bitcoin sitting there, and using and working to pay for your living expenses, then what you have is that you can consistently keep building from a dollar standpoint and getting more and more Bitcoin together, right? If you're not selling your Satoshis, if you're not selling your Bitcoin, it can consistently keep making money for you. Now, obviously, this doesn't include tax, to keep it simple, and it's assuming a 5x return on the second bull run, right? Which I think I think in most people's cases is absolutely possible, especially when we're looking at it from a crypto standpoint. So keeping or spending the golden goose is a key thing to think of. And as I said before, keeping the golden goose can have a massive, massive impact. So what's the impact over another cycle? Well, let's look at this. Let's say an additional cycle of keeping or spending the golden goose. Let's talk about spending the golden goose over an additional cycle. Well, we hit a top of the bull market two at $1.5 million, right? Because we went from 300,000, we got a 5x, which is 1.5 million. What did we do then? Well, we spent $200,000. We kept 1.3 million. We invested 1.3 million in the bear market number three, and it gave us a 3x return in the next bull market. So we ended up at $3.9 million. But let's talk about keeping the golden goose. Well, here we go again. We started with 2.5 million instead of 1.5. Instead of spending that $200,000, we kept that $200,000 in there. So we keep the amount at $2.5 million. Well, what happens then is that then we are investing at the bottom of bear market 3, $2.5 million, which will give us a return if we get a 3x of $7.5 million as opposed to $3.9 million, nearly a 2x more, right? Nearly a double than what you would have previously got, all because you didn't spend the golden goose. You didn't cash out those Satoshis. You didn't get rid of any of that Bitcoin that you had, and you simply just held onto it. And this is where we're seeing people over multiple cycles making multiple amounts of money. So when we talk about this and we inject also into this the impact of the halving, then cycles may get harder to predict after the next halving, right? So bull and bear markets are going to keep happening. That's inevitable, but they may not be as easy to predict after the next one because the rules of the game are likely to change. And this can happen. And I've mentioned this before, and we need to be aware and willing to adapt to whatever scenario there is, right? We need to adopt whatever scenario is out there and whatever the market is telling us and adapt to it. Because if we think that Bitcoin 4-year cycles are just going to go on forever, well, you know, that is a very naive way of thinking, and the chances of that happening is highly, highly unlikely. So if we look at this from the mining perspective, well, we know that new Bitcoins are mined, or as we say, created every day, right? So originally back in 2009, there was 7,200 Bitcoins per day. We had the first halving in November 2012, and then the amount of Bitcoins created every day went to 3,600. The second halving happened in July 2016. So the amount of Bitcoins created each day went from 3,600 to 1,800 per day. We then had the third halving in May 2020. The amount of Bitcoins created per day went from 1,800 to 900. And now where we currently sit in the fourth halving period since April 2024, the amount of Bitcoins created per day have gone from 900 to 450 per day. So this is the two great cycles theory, right? As I like to put it, okay? So it's one thing to be aware of is the two great cycles theory. So the current one we are in and the next one, okay? So while there will be more bull and bear markets, the next halving will provide what I believe will be a supply shock, right? So this is where we are right now, the halving of 2024, and where we currently sit in and around here of 450 new Bitcoin per day, all right? Now, after that, the amount of new Bitcoin produced following the next halving, it starts to become, you know, a bit of a supply shock here, right? We have 6 years to make as much money, in my opinion, as possible before we potentially get into an area where we don't really know what the world and what the markets are going to look like. So essentially what we want to be doing here is kind of making hay while the sun shines, shall we say, right? In an area that is much easier to predict, like this current halving cycle, than say what the next halving cycle could potentially be. Because the halving of 2028, right, that's when we go from 450 new Bitcoin created per day to 225 created per day. It's going to become a lot more with a lot more uncertainty and as shall we say, like I mentioned before, quite a supply shock. And I talk about this in the book when I talk about the theory of B-Day and behind that of what I believe is going to be a quite a significant supply shock within the market. And here is the impact of multiple entities, right? Now, this varies for everyone, right? Within different regions. So you need to know your tax implications, you know, potentially, you know, are your tax implications, are you best off keeping it personal? You're best off keeping it in your business? Could it be in your 401k, for example, in the US? Here in Australia, it's called superannuation. You know, for many people, their 401k is just getting completely gobbled up with fees and it's literally going nowhere. You know, well, you know, since what I did was take over my superannuation fund here in Australia, and you can turn it into a self-managed super fund, and you can, you know, you can then have control over your superannuation fund. So this is something and multiple different things that you want to potentially think about, and think about the impact of what, you know, multiple entities can potentially have in your overall investments. So let's look at multiple 4-year cycles with personal and also with 401k or superannuation money. So we've been, you know, we've been talking about personal, and you can see that the gains that are possible with personal, right? So now, what about if you turn this into like your 401k and do the same, or your superannuation and do the same? You can really set yourself up for retirement, especially if you string together multiple cycles. So often your 401k or your superannuation can grow faster, as you can't touch the money, essentially, right? You can't spend the golden goose. So also your taxes on this are less on the gains than on your personal. So over multiple cycles, it can get pretty crazy, right? So with your personal money, you're buying at the bottom, selling at the top, buying at the bottom, selling at the top, paying tax and different things in between, and things like this. But with your 401k money, like I mentioned before, you can still buy at the bottom, sell at the top, and buy at the bottom, sell at the top if you're managing it yourself. But what you can potentially do is that over multiple gains, because essentially, you know, quite often, more than not, you're not getting taxed as hard. You're also, as I've mentioned before, for the majority of people, you can't actually touch that money. So therefore, it's kind of forcing you to have this long-term investment perspective, right? So for anyone that's, you know, potentially looking at their 401k or potentially looking at their superannuation fund as it is here in Australia and thinking it's looking a bit worse for wear, shall we say? Well, maybe this could be a potential look at what you could potentially do, and then knowing also that one of the key parts of crypto, which everyone seems to have an issue with, is touching it all the time and selling it when you shouldn't be selling it. Well, the beauty about a superannuation or a 401k that you can potentially personally manage is that you can't take that money out. It has to stay in there. So therefore, you're better off leaving it in there for long-term gains. So let's talk about now where to park your cash potentially after taking profits, right? So you can preserve its value. And I talk a bit more about this in the book as well. And you know, as you already know, obviously I'm going heavy on Bitcoin. I'm going to be stacking more Bitcoin there, but also, and I've talked about this, having cash, having dry powder at the ready is often a really good way of benefiting from long-term investment markets as well. So we've got Bitcoin. We've also got gold, right? So obviously, when we talk about long-term preservation of wealth, gold is a no-brainer. Another one that a lot of people look at is shares. Okay, so obviously, potentially looking at some blue chip stocks and shares. Property, real world assets, right? Real world assets. Looking at property. You know, me myself personally, I'm not keen on shares. You know, when there's major corrections, you can lose chunks of it and things like that. I'm not as big on shares, but property, I'm very big on. Gold, I'm very big on. Bitcoin, I'm very big on. So you know, I'm looking for you know, real world assets to have it in, and obviously having cash on hand, in my opinion, is a massive benefit as well, because you can cash in on potential dips in the market. So over a long-term perspective, if you're looking at Bitcoin as an example, as I mentioned before, having dry powder there ready to go is often a very good way of being able to capitalize on the market, and having the ability to be able to purchase when the market dips. And another way that people do this and kind of keep in within the crypto market is having what we call stable coins. Now, stable coins are coins which you can which are essentially pegged to the US dollar. Now, I'm not here to recommend stable coins. Obviously, there's been stable coins in the past that have been depegged from the dollar and have potentially lost value against the dollar. But what I am here doing and sharing with you all is ways that you can potentially preserve the value after you've taken crypto profits, right? So obviously, profiting and off crypto and then holding it long term in Bitcoin, in gold, or in property are no-brainers. As I said before, shares are another option. I'm not personally as big on it, but that is another option as well. Having cash on hand as dry powder is a great option. And then if you want to keep it within the crypto market and not have to physically cash it out into cash in your bank account, well, having moving your Bitcoin or your crypto into stable coins and having it in a cryptocurrency that's pegged to the US dollar is another way that you can preserve the cash balance of your crypto. Pending if the market is in a bear market phase, and if that's the case, well, having stable coins can potentially hold that dollar value of your cryptocurrency. Now, remember, we need access to dry powder for the bottom of the next cycle. So that's why it's so important, in my opinion, as I shared before, why it's so important to have some cash reserves in place. And some of the biggest some of the biggest and best investors that there are in the world, Warren Buffett is a prime example of this. He always talks about and has dry powder, has cash at the ready to be able to purchase when there's blood on the street, right? To be able to purchase when there's potential gains to be made, and he wants to be entering into the markets when they are at the best prices. So having dry powder or cash on the sideline for the bottom of the next Bitcoin or crypto cycle is quite often a very good strategy to have. Just checking, there's a couple of questions here. Aaron's asked, do you sell your whole bag of crypto at the top or the majority before you buy back in? So Aaron, that's that there's no defined rule behind that. That does come down to, potentially to your potential risk profile and where you sit on that. A lot of people will hold on to their Bitcoin over multiple cycles. They'll never sell it. As I shared in the chart before, and they'll just simply sell their altcoins at the top and then buy back in at the bottom of the next bear cycle. So there's no rule. There's no rule behind that, Aaron. You can either sell your whole bag of crypto at the top and buy back in at the bottom, or you can just do a percentage of it. And as I said, there's no rule for to do it or not to do that. Christine's asked, Troy, how do you know when it's near the top to sell? Do you use AI to determine this, or what other parameters, etc., do you use? That's a great question, Christine, and I actually spoke about this a little bit more in the previous module. But there are a few different indicators from a technical and also from a fundamental aspect that I often have seen when we're in the midst of the top of a cycle. Now, if we talk about it from a technical perspective, now when I'm talking from a technical perspective, I'm talking about looking at charts and seeing what a chart is potentially telling us, if it's near the top of the market or where it may be. There's some indicators that you can look at and that you can view and you can see that'll tell us around the top of the market. And by indicators, I mean there's different things that we call EMAs and different tools like that we use within trading charts. Without getting too technical and too down, say a rabbit hole here, as I don't want to overcomplicate things for beginners. I guess the advantage for yourself and anyone else listening is that you, uh, being part of the Crypto New Rich program and community, you will be made aware, and I'll be sharing when I believe we're in the midst of the top of a bull cycle. And I'll be sharing some of the reasons why that is the case. Now, from a technical standpoint, there's some clear things that we usually see, but from a fundamental standpoint, there used to be a joke going around that said that when your taxi driver or when your Uber driver, when you get in and they start talking about Bitcoin and crypto, then usually that's a sign of the top. Now, that doesn't really work too well these days because every Uber driver and every taxi driver seems to have crypto that I get in with. And I don't know if that's the case for everyone else, but so yeah, that's not always such a good way. But you often find that there are clear signs when we're near the top. So an example of the last top, and I've told a lot of people in the community about this story where I was at a Melbourne Cup function, which, if you're listening from another country, is a massive horse racing meet that's in every November here in Australia, and that was in November of 2021. And I was in a group of about 30 people of close friends and family, and nearly every single person in that group asked me about Bitcoin and crypto in that day. And I remember going home thinking, my goodness, even people that didn't even care about Bitcoin 4 years ago were asking me all these questions and buying it, and were new experts and everything. And I thought to myself, wow, this is a clear sign of the top when where you're seeing people that usually have no interest whatsoever in crypto and Bitcoin. Maybe it's your grandma, maybe it's your uncle that always told you that Bitcoin isn't something you should do, and you now all of a sudden he's calling you up or messaging you and asking you for advice about it. There's some funny fundamental tops that we see like that, but it's difficult to tell the exact things that are going to happen until we enter into that cycle. Awareness is just a huge thing to have. So awareness is a massive thing, and I guess the advantage that you guys have is that, myself being through multiple cycles, I'm very aware of where we've kind of been, and where we're potentially are going to go, and how we can capitalize on that. James has said we can access after the age of 55, transition into retirement. Yes. So if you're talking about the 401k or the superannuation funds, that is the case, James. Absolutely. Marianne has said, in regards to having Bitcoin in super or in a 401k or a retirement fund, would we just leave it there and hold, or do you sell at the highs and buy back in again? So it's a great question, Marianne. And it's one where, once again, there's no answer to that. Okay. So the answer is you can do either. Now, if you want to take absolute minimal risk, then, it's probably much better for you, if you want to keep your risk all the way down, just simply never selling the Bitcoin and just buying potentially, a bit more in at the bottom of each cycle. Okay. Into your retirement fund. So that's probably the best way to go. But I know plenty of people who use their 401k or their superannuation fund, as it's called here in Australia, and they utilize it in the way of, being able to purchase at the bottom of a market, and then selling at the top of a cycle as well. So you can do either strategy, Marianne. No one way is correct and no one way is incorrect. What I will say, though, is that simply just buying it and holding it and never selling it, and then potentially adding to that, as I call in the book, feeding the beast, or dollar cost averaging into that, quite often that is can still lead to fantastic long-term gains, and it is without a doubt a much safer method to do as well. Just in case you don't time the bottom of the market or time the top of the market, right? It's a much safer way of doing it. Okay. George has said, I read today Apple Wallet is going to add crypto. Yeah, George, I mean, there's so many things that are coming in, and that doesn't surprise me at all. So Brian's asked about the top 10 coins that I've talked about with my winning portfolio strategy. That module is module number 3, Brian. So we've already recorded that module. So if you're listening to this module as a recording and you want to know where my top 10 coin strategy is and me talking about the winning portfolio strategy, you've just got to go into your membership area and go to module number 3, and you will find that module. Just having a look here now. Sandra said, if we sell and hold profit in stablecoin, does that mean we need to? Yeah, so something like that, Sandra, talking about tax, holding stable coins, selling stable coins, things like that. That's something that you'll need to get individual tax advice on, Sandra. So you're best off trying to reach out to a crypto accountant to talk to you about that, because it depends on your jurisdiction. It depends on how you have your profile set up. So yeah, there's a few different things that is dependent on that. Yes, absolutely, absolutely. Yeah, Debbie's just joked there. There are some people that are doubters and are mockers, hence the reason why I don't talk to too many people about crypto. And look, that's potentially maybe what's going to happen is, and maybe you know, you may be in positions where, you know, you may have the opportunity to speak about crypto or speak about Bitcoin, and you might bite your tongue and not do it because, you know, there's always someone that thinks they know better, or whatever that may be. But what I will encourage and say to everyone is that don't be don't be put off by someone else's silliness, shall I say? I'm going to say this in a very nice way. Someone else's silliness and someone else's um, quite simply just their lack of knowledge around Bitcoin and crypto, because I'm sure a lot of you are discovering and are realizing the more that you study Bitcoin, the more you start realizing just how incredibly powerful this asset class is, and why anyone on earth would not want to invest in it if you know just how powerful it is beyond me. And I'm sure as more people are doing more research into this topic, you're starting to realize the same thing. So even though you may potentially get mocked, or someone may say something because you talk about crypto, I always tell people, you know, I always encourage people to still say it anyway, because the beauty about it is that there will always be someone that'll potentially you can potentially open their mind to, and you know, this is the beauty about crypto. And hopefully, as the great man Robert Kiyosaki says, it's the people's money, Bitcoin. So hopefully as many people as possible can educate themselves on it, and you sharing that information is only a good thing. Maureen's asked, is it better to buy in Australian dollars or US dollars, taking into consideration transfer fees, etc.? So, Maureen, that's something that yeah, depending on your jurisdiction and where you live, that's something that you would need to take into account. So obviously, in module 3, we spoke about purchasing cryptocurrency, and I had our very good friend and colleague Bisha from Stormrake on, who are an incredible crypto brokerage service that are servicing pretty much all corners of the globe now. And they will be able to put you in a situation where they can help you and assist you with, you know, what is the better way of doing it, depending on what your local currency is. Are you better keeping it in your local currency or purchasing it in US dollar? 9 times out of 10, if you're using an awesome brokerage service like Stormrake, which once again, if you want to get their details, you just go back to module number 3 and the details are on there. I talk about it in the video, plus it's written in the membership area. You can, yeah, you can utilize awesome services like that from brokerage services that are very much in the know, and they can help you with that process, Maureen. and that should hopefully assist you in making your decision. So, so as I said, thank you for all those questions as well, though. Actually, before I move on to the final slide, thank you all for those questions. They were great questions. If you got any final ones, please drop them in. But yes, fantastic questions there. And as we move into the final slide here and we go on to what's going to be our next module is going to be a very interesting module and a very, very important module, which is keeping safe and minimizing risk with crypto. Okay, so we're going to be going over several safety and security measures. We're going to be talking about how to ensure that your crypto and your Bitcoin is safe and is held long term. Ensuring that that you don't have any issues or nasty surprises. Okay, so that is a very interesting module, and a bit of shall we say over the shoulder training to ensure that you are set up in the right way and ensure that that you are feeling comfortable and confident, because that's the big thing, right? As I said, these modules were set up and were created to essentially ensure that as a beginner, you can enter into the crypto market and feel safe and feel secure. And that's what I'm really hoping that you're starting to get out of that as well. Okay, so that brings us to an end to this module number 9. As I said, next module is keeping safe and minimizing risk with crypto. That will, for anyone who's listening to this recording, that will be available in the next module. For those who are here with us live, that will be in the next live session. Thank you all, for everyone who was here with us live. Thank you for being an amazing studio audience, a live studio audience, and asking some fantastic questions as well. It really adds to the value of the module, I believe, because there's always new things to chat about, and also there's always things that that maybe could have been potentially left out, that are always added in, and quite often, more often than not, if you're thinking the question, someone else is as well. So thank you all again for those who are live. Thank you for those who are listening to the recording. I will see you on the next module, keeping safe and minimizing risk with crypto. Until then, have a very good rest of your day, and it's bye for now.